Hello, this is Camilla, and I'm here from OHU with James Stewart, and we're going to be sharing with you a presentation that we put together for the Investor Forum that we shared in Littleton on the 17th of October. There are three parts to this presentation: an introduction, a little bit of a background, a draft share offer for Collett's Corner, and then a little bit about the company itself and the governance. As for an introduction, the site is on a prominent corner in the downtown of Littleton, and it's about 1,000 square meters, and we'll be building a building that's roughly 2,300 square meters. OHU Development is a property development company that believes in building communities by building buildings. We do this by listening to the community to identify the common purpose. So what is it that this group of people would like to come together and create? We work with groups of people to develop collectively owned assets, such as commercial buildings and co-housing and otherwise. We then support the purpose by creating legal, financial, and social structures to deliver on that purpose. And we work with a diverse group of consultants, including outside consultants as well as people inside of our team, to build and deliver the project. For Collett's Corner, so far where we've arrived at through listening to the community of what the purpose is for this particular development and this particular project, it's about investing in the livelihood and the liveliness of Littleton through building an attraction in Littleton. And it's a big part about this development is creating a strong sense of belonging and connection through how we create a building in the town. The project itself will have hot baths, a co-working space, a restaurant, several small shops, an apart hotel, so that's something like you can stay for one night or up to several months, and a bar and a cinema. We are currently in the middle of the design and planning phase. We've just wrapped up the design competition and chosen a winning design team. It will be in flux in association with Warren and Marnie, and we'll be working with them now from the concept design through participatory community design workshops, as well as meeting with business owners to develop the design further. If you're an interested business owner, it's a really good time to get in touch. And we'll be running our equity crowdfunding campaign in February of next year. What we've achieved so far: the land is owned outright, and we've identified the uses through listening to the locals, which are the ones that I've shared with you already. We ran the design competition, as I mentioned, and have chosen the winning team, and we've secured the initial investment for the project. What we're working towards in advance of the equity crowdfunding campaign is to identify business owners. We'll be looking at building the delivery team. So far we have the architects on board, and we're starting to bring in the other consultants that are necessary. We'll be developing the design through feedback, and there's a design workshop coming up on October 30th in Littleton. And we'll be ensuring that the building meets consenting requirements, and we will be going through a resource consent as well as a building consent. We will also work with a good QS and optimize the costs, along with, of course, working in tandem with the architects and to mature the design. We're also seeking directors for Collett's Corner Limited, and we'll be continuing to seek these early investors. We have a little bit more money that we're going to try to raise between now and February. This is an opportunity, there's often some confusion around what is equity crowdfunding versus what is plain crowdfunding. Equity crowdfunding means that you buy a share in a company and you get a dividend return. So you're essentially an owner of the company. Crowdfunding otherwise is just gifting money to a cause. And so those are the main distinctions. And through doing equity crowdfunding, it's essentially an opportunity to work together towards a common cause, but also it's about building businesses that do good in the world. We are currently moving towards an equity crowdfunding campaign, and we're doing this because we're really interested in how we can do a commercial property development through working with the community to build what that community wants in their town. And so I think this is really pioneering some new ground to be listening and working with the community in advance of building a building. And so this is quite a first in New Zealand. It's certainly a first for equity crowdfunding of a commercial development in New Zealand. It's also, the intention of it is to create a regenerative economic model, and that the people that are investors in this building will be getting a return from the building. And so it's about a distributed wealth across ownership. Your investment, if you were to invest during the equity crowdfunding, goes towards 4 things, essentially consultant fees, consenting fees, capital raise fees, and then construction fees. The building, I'm going to pass over to James Stewart, who's here with me, but this is an image of the building. There's more about the building on our website at colletscorner.nz.
Fantastic. So we're looking to raise $2 million in February of 2019, and we're looking to do that to underpin the costs that Camille has talked to. That $2 million investment would collectively provide for 32% of the company. We've got a minimum raise of $500,000, which would enable a stage development of the site to occur, but we're aiming for and hoping for a $2 million successful capital raise in order to enable the entire development to proceed. We've put a minimum investment of $100 to enable 1 share to be purchased, and we're really keen to ensure that minimum investment is kept as low as possible to ensure that anyone can invest, and that it's not just open to those who have much, it's open to those who have a little as well. And then on the other end of the spectrum, we've inserted a cap of a 10% ownership threshold to ensure that not one voice is too strong throughout the design and the operation of the building, and that we have as broad a community as possible being invested as owners of the asset. So who can invest? Anyone who's a New Zealand resident or citizen can invest, and we'd love you to sign up at colletscorner.nz to register your interest. You'll be receiving investor updates on how we're progressing with the design, the feasibility, as these things are matured over the next 4 months. We do recognise that this is a really unique site in Littleton, and we want to offer the site to Littletonians first. So we're opening the private campaign up on the 7th of February for a week to Littletonians to enable them to invest. We've had some great questions at the Investor Forum about what makes a Littletonian, and the working definition at this stage is someone who lives or works there, whether you rent or own your asset. If you're residing and investing your time and your life in Littleton, then you're a resident. And we've also had great conversations about if you live in Diamond Harbour, if you live in Governor's Bay, are you a Littleton resident? And where we've got to on that piece there is that we would love to include the whole Harbour Basin as Littletonians for the sake of this first week of early opportunity to invest. So if you're in the community ward that's represented by Littleton, then you classify as a Littletonian for the 7th of February. On the 14th of February, 1 week later, we'll be opening it up for a month to all lovers of Littleton, and we would love to see people from Christchurch and New Zealand invest, if there is still investment to be made after Littletonians have had their first bite at the cherry. So, as discussed, we've looked to raise $4.9 million of equity throughout the process. You can see the $2 million that we've talked about to date sitting there as round 2, but that's obviously not all of the $4.9 million we're looking to secure as the equity portion of the project. The land's been purchased by Camille, and that's got a value of $720,000, which will be retained as equity in the project. And currently, as Camille alluded to before, we're in the middle of a small personal business equity crowdfunding raise under the FMA regulations of that nature, where we're approaching people we've got a personal contact with and that also meet the other stipulations of the FMA regulations. And we're looking to raise $500,000 in order to fund all of the works that are required to take us through to the launch in February next year. Early geotech, structural engineering, QSing, paying for the designers, the architects, the planning advice, consenting advice, and preparing the IM and going through all the financial requirements that are associated with it. That costs us around about $500,000. And we've been incredibly encouraged to date. We've only got $140,000 of that 500 to raise, so we're just we're humbled by the fact that people have put their hands in their pockets and said that they're really keen to partner with us. People have come on and said we're willing to provide the services that you've got listed under your $500,000 in for sweat equity. So essentially providing that service at no cost in exchange for the equity piece. So we've been absolutely humbled that we're well over 2/3 of the way through to raising that $500,000 worth of equity. So we're really excited about closing that off and continuing to progress through to February. We've talked about round 2. And then on top of that, we've got an exempt direct equity investment category for larger equity investors. So if someone's got a larger amount that they're wishing to contribute, that's a direct channel that they can contribute and invest equity in that isn't through the crowdfunding campaign. So looking at what that means in terms of correlation, so both the land purchase and the first round of equity investment there, the 720 and the 500, carry a far higher degree of risk than the second and third rounds. To incentivise people to jump in for those initial rounds, we've priced that at a discount, which gives them a premium on their return. So a $100 share is being offered at $61 to those first round and early stage investors there. And then a $100 share is obviously being sold for $100 to a second round investor and a third round investor. Down the bottom, you'll see that there's almost 5,500 shares that are being sold to or being provided to Ohu Development as the founding shareholder. So we're providing the development management service for this project, and in a typical development, a development management fee is provided for that service. Around about 3.5% is typical. We want to do things differently, and we want to put our money where our mouth is with respect to Ohu Development. And instead of just taking a fee in terms of cash, we want to take a far lesser fee and take some equity in the project. So we're really banking this project as being a success. We want to take some risk. We want to we want to see this project drive through to fruition. So we're taking a lower development fee in terms of cash, which you'll see in the next couple of slides, and we want to take equity in exchange for that. So that's how that's being structured at this time. The same information represented pictorially, so you can see the 32% of equity crowdfunding that we were looking at raising in February, and then the other share parcels there. The more astute of you at home would have realised that some of these shareholdings aren't consistent with the 10% cap that we've put on ourselves in order to make sure that the ownership is distributed as wide as possible when we don't just have one person. So the land parcel, for example, sits at 18.9%. The expectation is that, subject to demand in February next year, if there is enough demand to not just raise the 32% equity crowdfunding portion and then the other 27.2% from the other $1.7 million of third round equity investors, if there's still additional demand, we're looking to sell down that 18.9% of land down to a 10% cap. So we'll enable more people to come in and to see that lighter shade of yellow there represented as a 10% shareholding after that sell down. So there's two classes of shares that we've got. We've got founder shares, which represent the land purchase and the Ohu Development shareholding piece. And currently there's no cap on those shareholding, but we've talked about that principle of a 10% cap there that we'd like to adhere to. The reason that we don't want to stipulate that through the Constitution at this stage is that essentially we'd be in breach at the outset. So we've got the principle that we're trying to achieve of as many people investing in this project as possible and not just a few larger investors. But we've obviously got to be pragmatic with what we're outlining in our Constitution and how that's going to play out. We don't want to hamstring ourselves at the outset. And then we've talked about all the other investor shares with a maximum of 10% shareholding. So it wouldn't be a good crowdfunding, given that it's an equity crowdfunding, it wouldn't be a good crowdfunding without incentives. So in addition to the projected dividends and the projected capital gain, we want to, look after people who are investing in and incentivise you to jump on board. Given we're launching on Valentine's Day, boxes of chocolates, dinner parties and date nights are looking pretty attractive as good Valentine's Day presents. We've had really great feedback about getting a quote or something engraved in the courtyard there, which would be fantastic. And another brilliant idea that came out in the investor workshop that we had last night was, well, these are gifts for investors, but what about gifts for the community? And we're really excited exploring that. Once the equity crowdfunding may raise 500 or $1 million, and then $1 million, and then $1.5 million, and then reaches close, we'd love to put on events and give gifts back to the community as an early teaser of how this project's designed to really benefit the community and unlock those social dividends that we're all really excited about. So this could be movie nights through pop-up cinemas on the site. We could be putting up hot tubs on the site to give people a bit of an experience about what's going to be happening through the hot baths later on. So we'd love your ideas. We know that you are a really creative community out there. So please contact us with your ideas about what we could do to the community to celebrate these investment milestones as we reach them. So here we've got the estimated project cost of the development. So you can see down the bottom there, we're looking at a development cost in total of around $9.6 million. Right down the bottom, you can see that that's split roughly 50-50 through debt and equity. We've had some really encouraging conversations with banks at this stage who are expressing interest at funding more than 50% of the development cost. Depending on what level of pre-leasing we've got. And I guess that puts us in a really interesting place of tension. I think we as a collective group would love to see as much equity investment in this project as possible so you can have a greater degree of community ownership. But obviously equity is cheaper than debt, and debt's inversely more expensive than equity. And if we had more debt in the project, the financial returns back to the community are going to be greater. So we're left in this neat paradox about the social returns and the commercial returns back to our investors, who are in turn community members as well. So at the moment, we've put it relatively 50-50. We're going to be pushing for as much equity investment as possible through the original $2 million, the initial $2 million piece. That's set at the levels of returns that we're talking about in just 1 second. And it may be that there's secondary and tertiary equity rounds that are at lower rates, probably more commensurate with traditional bank debt, in order to ensure that the project returns are still retained, but we still have the benefit of equity crowdfunding across the project. And so this is our working assumption at the stage of the IM, and we'll be responding to that based on the level of investor interest at the time of the February crowdfunding launch. If there is more appetite for equity, then fantastic, let's have that conversation. No one's done an equity crowdfunding property development in New Zealand or internationally, as far as we're aware. Whilst we've had really encouraging feedback from a range of community investors, we won't know until that time of that launch whether there is $4.9 million worth of equity interest in the project. If there's not, we know that there's more bank funding that could step into that void. But our personal quest is to have as much equity crowdfunding in this piece as possible. You can have a look at the project costs at the top 8 or 9 rows there. So we've talked about the land being purchased. There you can see the Ohu development fee, that's the cash fee, which obviously when taken into account with the equity crowdfunding is around about the 3.5% mark. One thing that we have tagged is that consenting fee is a fee that's been advised by the council. We're aware that that's an optimistic fee if everything is packaged up rightly and nicely from a consenting cost. If things don't go completely to plan, that consenting fee will be too light, and that's why we've got a contingency of 10% of total construction costs down the bottom, and so there's a large contingency for this stage in the project if that consenting fee is too light. It's probably worth noting, though, that one of the mechanisms that we've got to make sure that consenting fee is more accurate at that $60,000 level is that all of the professional services that will be packaged up and form part of that consent application, a large number, in fact the bulk of those people, are equity investors in the project as well. Those are the groups that we referred to earlier as sweat equity investors or equity investors in kind. And given that they actually own a stake in the company, they're going to be more incentivized to making sure that all the documentation is packaged up as best as it can be in order to ensure that the consenting cost can be as close to as $60,000 as possible. So there's a really nice safeguard in there at a primary level, and then there's a secondary safeguard through the contingency sitting there if it needs to be drawn upon. So if you've got any questions about these costs as a potential investor, we'd love to have a chat with you about it. Obviously, there's a detailed financial model that sits behind this, and this is just a summary tab of it. And we are happy to release that financial model to interested investors, subject to signing a non-disclosure investment. So please contact us through the web link that we've provided if that is you and you'd like to know more about the detailed costings of the project. Obviously, with an equity crowdfunding investment, as Camilla said, you're investing as an owner of the asset. You get something back, and part of that, the first piece, is that you get a dividend over time through the profit that this development makes. And here you can see indicative 10-year projections for the second and third round of investment, based on buying a $100 share for $100. We're looking at about a 6% return in the initial year of operation, which is 2021, which is the first full year. Obviously increasing up in nominal terms as your profit increases through increased rents and decreased debt. And then in 2040, when your debt is fully repaid, obviously your debt service costs are now nil, and your equity returns, your dividends increase accordingly, and so that's why you see some rather larger numbers in future years. But obviously you're not just looking to invest for your dividend return, you're looking for a capital gain as well. And again, in nominal terms, here's our projected value increases based on the indicative draft figures that we've got in the information memorandum at the stage, and again in nominal terms, so they haven't been inflation adjusted, so these are in dollars of the day. One point just before we go back off the financials, so these figures are all sitting based on the original indicative feasibility numbers that we've had projected. Now that we've got Influx and Warren on board as the architects with their design, we can now take our financial feasibility to the next level. So over the next 4 to 6 weeks, we'll be looking at costing that design up, having it QS'd, and updating the figures. So both the cost tables here will be updated, so will the dividend returns, and so will the capital gain. All of those projections will be updated. So again, sign up via the web link so we can keep you updated on how those cost estimates and projected returns progress. So as an investor, you'll hear from us through 3 ways. So as an investor, you're part of the team, you're part of the company, and you've got 3 main forums of being involved. One through the annual AGM. Quarterly newsletters will also be going out, and there'll be opportunities there to comment on and feedback on bits of the design and obviously as the building's being operated. And then there'll be an opportunity to vote at shareholder meetings as well, both online and in person. Some of the questions we've had around the shareholding piece, are you just investing in this ad infinitum, or are there exit opportunities? And it's a fantastic question. So the long short to that question is yes, you can. Forums such as sharemarket.co.nz exist for you to offer your shares on a willing buyer, willing seller platform. So you can sell whatever widget you would like to sell there, and if that's 100 Collett's Corner shares, you can do that at that time, and then you can attract a willing buyer for your sale of your shares at whatever price you think they are worth offering those are at. But it's really important to note that this is Ohu's first development. We've got a pipeline of 21 projects sitting there. This is our flagship project that we're putting our energy into at the moment. But there are a lot of other projects that are in our pipeline, and Collett's Corner won't be our last. There's a forum called brickx.com, which I'd really encourage you to go and have a look at, which enables the transfer of ownership in one organisation or one property development to another that's been structured by the same organisation. And it's very much our anticipation that we would enable you to be able to do that in the future, to sell a share in a project, an OHU project, to buy shares in another project. And what we're really excited about that is that enables different people to get in at different times. You may be an investor that's got a slightly larger tolerance for risk and may know something about the property development market, and you're happy getting in at the early stage by having a look through the financials and saying, great, we think that this project has got a likelihood of being tenanted, being consented, being delivered on time and on budget, and then being a commercial success through the tenancies that it has. So you might look at the early returns, taking on more risk, and be happy to entertain that. Alternatively, you might have a lower tolerance for risk, and you might want to only invest in a project once it's been operating for a year or two. The capital raise risk is completely mitigated. The consenting risk is mitigated. The delivery, whether it's on time and on budget, is completely mitigated. And you might have 2 years of history of the operation of the entity to give you confidence about where it's likely to go in the future. So obviously lower risk, lower return, but that may be your sweet spot. What having a forum like BrickX for OHU developments enables you to do is that if you're a higher risk investor, you might want to jump on board at the outset of the project, and once it's operating or consented or delivered, you may wish to sell down to reinvest in another early stage project. So you may sell your shares to someone with a lower tolerance for risk who's happy to jump on board and take on that level of risk to enable you to invest in other projects. So really excited about how capital can be recycled throughout the project development spectrum and timeline in order to enable more community-led projects to unlock both commercial dividends and social dividends. Back to you, Camille.
Thank you. So we'll talk a little bit about the team. Currently we have OHU Development, which is basically bringing together the community and building the community around this project. And then we have Influx in association with Warren and Marty as the architects, and BuildTech as the development manager, and we're starting to bring on the wider consultant team, which includes the engineers and otherwise. By the end of the month, we'll have that full team appointed. As far as the governance goes, there are two classes of shares. Founding shareholders will appoint 3 of the 5 directors, and all shareholders will appoint the other 2 of the 5 directors initially. Essentially, that's set up so because OHU Development is ultimately responsible for making sure that this project can be delivered, and so we want to also make sure that we can appoint the directors that we believe have the ability to see this project through implementation. As we move into a company of operations, the founding shareholders will very likely no longer appoint all the directors, and in the Constitution it has it as a clause that it can hand over those rights to all shareholders. Upcoming events, the next one is the participatory design workshop with Warren and Marnie and Influx, and that'll be focused on providing an overview of how the plans are coming together and answering questions, and we'll also do a little design workshop about what we want the courtyard to operate like, and so what kind of activities do we want the courtyard to be able to support and as a public space. There is another investor workshop coming up on the 13th of November, and then followed by another participatory design workshop in early December. And then, as we mentioned earlier, the equity crowdfunding private launch is on the 7th of February. We need to have your email in order to send you that link, so if you are local, living, working, and or owning land in Littleton, please do register your interest. And then the wider, bigger public launch will be on the 14th of February, and it's called Love Littleton. So we will do a large event on the site on that day, and it would be great to see you there. The campaign itself will be closing on the 14th of March. So the website is www.collettscorner.nz. You can register your interest there. You can also see the design and stay up to date as to the current happenings. And thank you so much for your time today.